Welcome and thank you everyone for joining us today. My name is Alexa Milne and we'll get started with today's webinar in just a few moments. Today's COVID webinar has a special focus on the highly affected sectors credit availability program, and we're joined with special guests from BDC. If you are new to the GoToWebinar platform which we're using, I'll make a few technical notes before we begin. On the webinar panel, this is the blue or orange flower icon on your screen. You'll see the handouts pane. Here you'll find today's presentation where you can open, download, and save for later. There's also a questions pane where you can enter your questions for our panelists today, and we try to answer as many questions as we go through our presentation, either live direct to you or through our chat function. Following the webinar, please take a moment to complete our short survey letting us know your experience today. You'll also receive a recording of today's session by email tomorrow. And with that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Thank you, Alexa, and good morning to those of you in the West. Good afternoon for those of you in the East. Welcome to our 44th COVID webinar. We've been doing these just about weekly. We occasionally skip a week, but we've been doing these just about weekly since COVID started. And as many of you who have been joining us since the early days know, what we intend to do on these webinars is bring you the latest COVID-related news with respect to particularly with respect to the support programs and the questions that business owners have across Canada. And so I am joined today by, as Alexa mentioned, we have a special guest, Karen, who will be introducing in just a moment from BDC to help us understand the HASCAP loans, or the highly affected sector loans, to add to the alphabet soup of programs that are out there. We're going to do a bit of a deep dive on that to help answer your questions. I'm also joined by my very, very capable and wonderful colleagues. Corinne Pullman is with us today. And do we have Brendan and Rachel with us as well to say hello? Hi, Corinne. Excellent, and Brendan's here as well. And Brendan and Rachel take your calls from across Canada on the helpline, so they're very plugged into that side of what CFIB does and are good at answering some of the more detailed questions. Corinne manages our Ottawa team, among many other things that she does. She's very capable, as you all know, and she really is the expert in all things to do with Ottawa and has been very involved in the advocacy work that we do on the program. I am also work closely with Corinne and our research team and our marketing team. So but with this group of four here, you've got a lot of CFIB covered. And so together we try to do the best we can to answer as many questions as we can throughout the presentation. But we also, and I will call Corinne and Brendan and Rachel back up in a moment, but before I do that, I'll just mention briefly that we also, if we go to the next slide, have a website. There it is, CFIB.ca, and very prominent on our website, of course, is the COVID-19 Help Center, and you will find many frequently asked questions there. Of course, our helpline is also available, so we have counselors like Brendan and Rachel working across Canada to get as many of your questions answered, and the helpline number is there as well. We'll put that up at the end of the webinar, so if you don't catch it now, don't worry, it will be up again. And of course, as Alexa just mentioned, you can download the handout from the webinar on the side of the screen there. If we go to the next slide. We like to start these webinars before we do a deep dive into the alphabet soup of acronyms and getting into the programs with just a little bit of inspiration. And so we found a few more quotes for you today. The one from Jodi Picoult, who I don't know if any others like her books, but I do find they're great reads for the beach. But the human capacity for burden is like bamboo, far more flexible than you'd ever believe at first glance. Good to remember that at times like this. Then there's Greg Kincaid giving us a little bit of, let's keep plowing ahead, something that business owners are very, very good at. And Christopher Reeve reminding us that an ordinary individual is the one that finds the strength to persevere and endure in spite of overwhelming obstacles. And certainly COVID has thrown a lot of obstacles at us. And Corinne and I especially liked the "every flower must grow through dirt" proverb. For some reason, that one really put a smile on our faces. So a little bit of inspiration to start, and then getting into what we are going to cover today. There's not a lot that's new, but Corinne will go over what's probably more what's recent in the last couple of weeks. And then we'll get into introducing our special guests and do a bit of a deep dive on the highly affected sectors credit availability program, which is now more frequently referred to, I think, as the HASCAP, and then we'll get into questions and answers. And so with that, we'll go to our next slide, and I believe we're trying to keep this part short today, so we're going to get straight into what's new, and Corinne will give you a bit of an overview of what's been happening.
Great, thanks, Laura, and good day, everybody. Thanks for joining us once again. There wasn't a lot new this week, so we just wanted to sort of reiterate a few of the things we did share with you last week. So it's pretty big news, and also we overlooked a couple of small details we wanted to make sure you were still aware of in regards to the rent subsidy and the wage subsidy. They did announce how it will work from March 14th to June 5th, which is essentially the same as it does now, with just a couple small exceptions. So that means for the wage subsidy, there's a maximum wage subsidy of up to 75%. Rent subsidy is up to 65%, but there's also the lockdown support associated with the rent subsidy that allows you to get up to 90% should your business have to be substantially locked down or curtailed and restricted. There is a bit of a change in two areas. One is that they did sort of change the year-over-year method to demonstrate revenue declines. So starting on March 14th, which again, the next period starts next week or this coming weekend, you can start using a 2019 reference month. We actually put a table there so that because of course with the deeming rule, you're allowed to use one of 2 months to determine which revenue loss is most beneficial for your business. But you'll see going back to December all the way until June what the months that you can use to compare if you're using that year-over-year comparison. The important one to remember is this current one that we're about to go into from March 14th to April 10th. You can use either February 2020 or March 2019 as your comparator to your current revenue decline. So that's going to be an important one. After that, it's the 2019. Before that, a couple months, it's the 2020 version. So it does get a little bit more complicated that 1 month, but those are the choices you have for the period that's coming up. Of course, you can still use the alternative method. If you've been using that, you continue to use that, which is when you compare your revenue losses to your average revenues for January, February of 2020. So that continues to be available for those that have been using it, but for those that have used the year-over-year, this is the sort of new schedule going forward. The only other thing we wanted to mention is around the baseline remuneration or the pre-crisis pay. This only applies if you have non-arm's length employees or you have employees who are being paid but not working on furlough. So this, they made a slight change there in that they actually expanded the number of periods that you can actually choose to look at the baseline remuneration or pre-crisis pay for periods 14 to 16. So if you have non-arm's length employees and you have furloughed employees, you now have 3 different periods from which you can choose from to calculate the baseline remuneration in order to get the wage subsidy. If you don't have those, don't worry about that particular change. It doesn't affect you at all. So that's just a bit of a recap of the news from last week. The next slide quickly we'll just walk through is just a couple other very small things we wanted to note. One is the Canada Emergency Business Account loan applications. The deadline is still March 31st. So if you have not yet applied for the original loan or want to get that extra $20,000 extension loan, you do have to sort of get your application in within the next couple of weeks because it will be closing on March 31st. As far as we know, that's what we've heard. There has been no sort of talk of extending it. We are encouraging them to consider flexibility around that or extending it, but as of right now, March 31st is the deadline. So get your application in if you think it's something that you have not taken advantage of yet and could use. And the other thing, of course, is the federal budget. We just wanted to mention that the federal budget tends to be when the government also makes many other big announcements of what potentially may be coming. We had thought maybe it would happen in March, but it has been kind of confirmed that it will not happen until at least late April at the earliest. Now, there hasn't been a budget federally in 2 years, so it'll be something that will be long overdue. And so I just want to sort of give that small update. On the provincial front, restrictions are continuing to slowly ease across the country. with some looser restrictions finally coming into parts of Ontario, like the GTA. Again, still pretty restrictive, but at least a little bit of loosening up. Same in Newfoundland and Labrador that had been under lockdown, especially in the St. John's area. They're starting to loosen that up a little bit as well. Alberta has gone a bit further ahead. They've moved into a full stage 2, so they're opening up a lot more. And then most other regions, though, across the country are kind of where they were about a week ago. The only other thing is BC announced improvements to their SME recovery grant. That actually is going to make it even easier to access, and they've extended the deadline. So if you're in British Columbia and this is a grant that's of interest to you, you may want to take a look at it, or if you looked at it before and you weren't eligible, you may now be eligible. There is a link there that you can go take a look at that allows you to see if you may now be eligible. And they also extended the deadline from March 31st, August 31st. So for our folks in BC, that may be something you want to take a look at. And finally, on a little bit of good news, vaccinations continue, and they are continuing to roll out right across the country. And I think the good news is a 4th vaccine has now been approved in Canada. So there's a lot of discussions about how that may speed things up and hopefully move us more towards an opening up of the economy more quickly than we had originally thought a couple of weeks ago. So that's sort of the news this week. So we now want to get to sort of the main focus of today's webinar, which is the Highly Affected Sector Credit Availability Program. And I'm very pleased to introduce our special guest from Business Development Bank of Canada. It's Karen Kastner. She is the Vice President of, I think, Government Relations and something else. I'm sorry, Karen, I lost the. So Karen's going to walk us all through a little bit about how the program works, and then we're going to sit down with Karen and ask any questions that you guys may have and have a discussion. So over to you, Karen.
Thanks, Corinne, and good day, everyone. I'm really pleased to be here. I hope you and your families are all staying well and healthy. Before I begin, I just want to thank the whole CFIB team for giving me the opportunity to be here and to be with you, and also for the tremendous work that's been done by CFIB over the course of the year, making sure that all voices are heard and playing such an important role during this very, very difficult time. So I will spend the next 10 minutes going through the items that you see enumerated here on this slide. As I go through kind of the main points around HASCAP, the Highly Affected Sector Credit Availability Program. Next slide, please. I think you could actually move to the following slide. Great. So the Highly Affected Sector Credit Availability Program is one of the newer programs that has been introduced, and the title suggests that it's limited to certain sectors. It is not. It is a guaranteed program that's available to all businesses, and it is sector agnostic. Under the program, BDC provides 100% guarantee to financial institutions that do a loan under the program, and the intent is to increase the availability of liquidity to highly affected businesses. The proceeds of the loan, which go up to $1 million, are meant to fund operational cash flow needs of the business and ensure that we could, that the business could kind of get over the very stressed period that many are facing today. So from a process standpoint, as a first step, the business owner is to go to their primary financial institution, and the business could only go to one financial institution, and that is their primary lender. If their primary lender is not participating in the program, then the business can apply to another financial institution. As of today, there are over 40 participating financial institutions, and those are listed on the BDC website. Next slide, please. So, key program features. Before I get into the specifics, I just wanted to underscore a couple of design principles that were used in the development of HASCAP. The idea was that we really wanted to ensure that there was broad access to the program, and that's one of the reasons why a guarantee program was chosen. Through a guarantee, we were able to make use of the extensive network of both banks and credit unions across the country, and that way, extend access through that very deep network. We also wanted to ensure that the decisions were made by the financial institutions as quickly as possible. And so the way that the program is designed is that there is a degree of predictability in the decisioning. If the business meets certain criteria that are very specific, then the financial institution authorizes the loan. The loan amount I mentioned goes up to $1 million per legal entity that applies, and there's also a floor of $25,000. So loans under HASCAP will go from $25,000 to $1 million per legal entity. And where there are related legal entities applying for a HASCAP loan, there is a cap of $6.25 million. There are a couple of restrictions on the use of the loan proceeds. One of them is that the loan can't be used to pay down an existing debt or lease facility. The idea there is that we really wanted to provide for this loan to provide incremental credit, and so it provides a bit of a runway for a business that needs the cash flow to get to the other side. The repayment term is 10 years. There's a 4% interest rate. And there is also a 12-month postponement of principal repayments offered to the borrower at the start of the loan. No personal guarantees are to be taken to secure the loan, and the program is available until June 30th, 2021. Next slide, please. So as far as eligibility, I'll spend a couple of slides on eligibility. There are a couple of general requirements. One, that the applicant be a commercial enterprise and that they are generating revenue from the sale of goods or services. There is a requirement that the business had to have been financially stable and viable prior to the current environment. So we've set the March 1st, 2020 as the time frame for that. So financially stable and viable prior to March 1st, 2020. And that means that they cannot have had an impaired loan as of that date. And other conditions apply, which I'll get into in the next slide. So one of the, as the title suggests, one of the features of this loan is that it's intended for highly affected sectors, and the way in which the government chose to determine that is through a revenue decline. So in order to be eligible for HASCAP, a business will have to show that they have sustained a minimum of 50% revenue decline in 3 months, not necessarily consecutive, within the 8-month period prior to making their HASCAP application. The other point that was included is that a business will have had to apply either for the wage subsidy or the rent subsidy. And in the loan process, financial institutions will be asking for a proof of that and proof of receipt of payment through one of those programs, either the wage subsidy or the rent subsidy. Where a business does not qualify for wage subsidy or rent subsidy, in those cases, financial institutions can use financial statements to determine the revenue decrease of 50% or more. Next slide. There is an additional criteria based on loan amount being sought. So where an applicant is applying for a loan under $100,000, then the financial institution that they're applying to will apply a probability of default requirement. Again, this is going to be determined as at that business's state prior to COVID, so prior to March 1st, 2020. In the case where a business is applying for a loan between 100 and 250, that same probability of default requirement will apply, and the business will also have to show a minimum revenue in the previous year of $500,000. And then For loans between 250 and $1 million, a debt service coverage ratio will be determined, and the business will also have to show that they have a minimum S&P CCC+ rating. All of these criteria, I'll just reiterate again, are determined on the basis of the business's position prior to COVID. Next slide. I mentioned that the door to HASCAP are the financial institutions that are participating, and really that the financial institutions, with support from BDC as we kind of work through this initial launch period, the financial institutions will do everything, right? They originate and authorize and manage the loans, collect the documentation, administer the loan portfolios, report on transactions, and then in the event of default, they enforce on the loan as well. So BDC is not administering these loans. It's really being done through the network of participating financial institutions, both banks and credit unions. Next slide. I wanted to underscore just a couple of other requirements that the banks will be applying. Obviously, they have standard loan processes as it relates primarily to their regulatory requirements. So anti-money laundering, know your client requirements, and other regulatory requirements will obviously be applied. I mentioned proceeds before, so just want to reiterate that the proceeds of the HASCAP loan cannot be used to replace or refinancing a business's existing credit. And that does not preclude, however, the normally scheduled monthly payments, whether principal or interest, to be paid by the business on an existing debt. Doesn't preclude ordinary course of business purchases, etc. The other specific exclusion, in addition to that you can't use the HASCAP proceeds to pay down a loan, you also cannot use the proceeds of HASCAP for dividends or distributions or bonuses that are not so full stop. But we do understand that in some cases, business owners will use dividends as a form of remuneration. So there is an exception for that, but to a maximum of $200,000 and in accordance with the business's historical practices. Next slide. So the next slide really just gives you a bit of a visual on the process that business will follow when they apply for a HASCAP loan. I mentioned before that the door to HASCAP is the business's primary financial institution. Where that financial institution is not participating in HASCAP, another financial institution, the business can apply through another financial institution. So an initial conversation would be had between the business and the FI, and then the eligibility at a high level will be determined. So looking back at the eligibility that I mentioned before, as it relates to probability of default or a debt service coverage ratio, depending upon the amount of the loan sought, the revenue decline determination, and whether the business has in fact applied for the wage subsidy or the rent subsidy, in addition to the FI standard lending practices. Once that's done, then the business would be asked to fill out an online ID form, and then the credit submission would be done, and it would go through the normal process at the financial institution, risk management approval, document preparation, and then signature and submission. So the only process difference it relates to that second column and is dependent on the loan amount being sought. So that's where there would be a slightly different determination depending upon the loan amount, but otherwise the process remains the same. So I will pause there and turn it back to Corinne and open to any questions.
Great, thank you, Karen. Laura will join me as well. That was great overview and with lots of time to manage questions, of which we have a number. So they certainly have started to come in. So we'll start with some of the earlier ones. I mean, there's quite a few questions around eligibility and questions around, what is, the idea that you have to have 50% revenue loss over 3 months is something that, and you have to have been sort of viable prior to the pandemic. There's sort of some folks are feeling a little bit like they're just sort of outside the scope and wondering if there's some sort of flexibility around that. So for example, I can give you a few examples here. We had one particular member say, in 2019, their sales were negative due to an expansion that same year. So therefore, the example they said is they had sales like in the 1.8 million category in 2019, but they also expanded their space that year to double in size. So it kind of resulted in a bit of a loss for that year. And then since COVID hit, their revenue's been down over 90%, but they're not sure that they'll be eligible because it looks like they were sort of not necessarily viable per se prior to the pandemic, but they were sort of going through a transition and expansion. So what do companies like that do when they're in a circumstance like that? Are they just out of luck?
Yeah. Thanks for that. By the letter of the HASCAP agreement, they don't meet the criteria. And there are two things that I want to say. And the first is that and I don't want this to sound like a punt, but in order to change the agreement, because this is a government-funded program, it really is a decision on the part of the Government of Canada. Having said that, this is not the first time that we've heard the example that you're raising, and there are a couple of examples, frankly, that we've kind of heard of, and we'll always bring them to the attention of our shareholder, the Government of Canada, for consideration. So I want to assure your members that we're very alive to the fact that there are companies that may fall outside of the current parameters of HASCAP, and those are being brought to the attention of the government, and frankly, the government is also listening with very open ears to what they're hearing from all of the industry associations about how HASCAP is going. So I unfortunately can't give a definitive answer on this particular case, but want to reassure folks that it is important to raise these cases that are falling outside of HASCAP so that they could be considered in a deliberate way.
That's good to know, and I think it's important. So for everybody who has these sorts of examples, they actually help us to bring these to BDC and to the finance who ultimately makes the decisions and makes the changes. Excuse me, I have to cough here. Excuse me. So continue to raise them. So I think the answer right now is no. Under current rules, you would not be eligible, but continue to raise it, and we'll continue to raise it, and we'll see if we can get some changes made down the road that can potentially allow businesses in circumstances like this. I had another question. You've had losses in the last 2 years. That means you're not eligible. Again, you would say no, they would not be right now, but perhaps that's something we can potentially influence as we move forward. So thank you, Karen.
Yeah, and I'll just undertake here to get back to you, Corinne. Just your members know that we have a continuing dialogue to get back to you on if there is a definitive answer on that particular point. So the member that asked could at least know whether they should go back to their financial institution or not.
And I know, Corinne, that this is something that you're actively advocating on with government as well. So those examples, as you said, are very helpful for us as we advocate for more flexibility in the program.
Yeah. So I have more questions, but Laura, did you want to go next?
Well, I could ask one from Ian on interest rates, and I think the question is really, and this might be more for an idea for you to advocate on, Corinne, as well, but why can't they reduce our existing loans to 4%? to show help during these times. So, you know, if he has a loan at 6.5% and 5.5% with BDC. And has there been any, Karen, is that an idea worth us raising? I understand that's not the way the program is designed now, so your previous answer is probably the same for this question, but is there any, do you think there's any merit in us advocating for an idea like that?
Well, I think you listen to your members probably more than you listen to us as far as what you should advocate for. That is a tricky question. You know, if I think back to the policy discussions for HASCAP, the idea really was to provide for incremental funding, and I understand the logic in using one loan to pay off another, but if you do that, then you may not have the working capital that the HASCAP loan is intended to provide. And of course, look, you know, it would also raise many questions about how do you deal with all of the other businesses that may have, you know, higher loans that are higher interest than HASCAP. So it would have, you know, these kinds of questions can have very, very large impacts.
Yeah, I know sometimes the real question I think I'm asking you is on the back end. Is that complicated? Because as we advocate, sometimes there are things that sound simple, but then on the back end there are some challenges, and it sounds like that would be the case on this one. But I think it is an interesting idea. So Corinne and I will take that away. Ian, thank you for that idea. I'll ask one more, Corinne, and then I'll turn it back to you. Chris is asking, is there a 12-month postpone? Just a little clarity on what happens on the loan. Is there a 12-month postponement of principal repayment? Do we pay the interest for those 12 months?
The answer is yes.
Okay.
So the postponement is on the principal, and interest is paid during the 12-month period.
Okay. Good.
So another common question, Karen, that's coming up, and it's one we've been actively chatting with you about, is the purchase of new equipment. That's come up a few times now in the questions. So I had Katie asking, can I use HASCAP to purchase new equipment? I also had, just a little further down, if you give me a second here, Ken ask, can the BDC loan be used for new equipment to increase efficiency and reduce production costs? So maybe you want to clarify a little bit about when it may or may not be included.
Yeah, you know, the HASCAP agreement as it relates to the use of proceeds has two specific exclusions, which I mentioned. One is the paying down of an existing loan. The second is the payment of dividends and bonuses. Other than that, it is, there are no other specific exclusions. So equipment as such is not excluded. And we really wanted to be able to provide a degree of flexibility for businesses to be able to operate their business. And we are getting questions also from the financial institutions on this, because it is a question that they have. We are trying to provide guidance on a case-by-case basis, but also encouraging the financial institutions to use their judgment. If a business needs a piece of equipment to run their business, you know, you know, the financial institute, it's not specifically excluded.
Okay. What about, though, I had another one here about someone who has planned acquisition be considered operational. For example, they had planned to purchase a competitor prior to the pandemic, and discussions were commenced on the premise that this would assist us to consolidate and better compete due to higher volume and large buying power. So is there any possibility they could use some of this loan for something that they had already started down a path with?
So that's a question I haven't heard before. And okay. And maybe I could get back to you on what the views are on that one.
All right, Rehan, so thank you for the question. We will, if once we hear from BDC, we'll see if we can sort of include it in a future FAQ on our website. The other possibility, if you don't see or hear anything from us, then please give us a call on our helpline, and we'll make sure that they are armed with the information once we get it as well. So don't want to leave you hanging there, Rehan, on that particular question. The others that are coming up, I had one here I'll mention, then I'll throw it back to you again, Laura, is Stephanie's asking, when determining the amount of the HASCAP loan requested, do banks work with the clients to determine this amount, or do clients have to pick the number they want and either get the approved or denied for that requested amount?
That's Kevin's question too, which is how does the bank decide on the amount of the loan?
So the way it's designed, it's really demand driven. So the business decides what they need and they apply for it, and then they'll be subject to those any one of those 3 criteria depending upon the amount being sought. I have seen cases where a business has applied for $1 million, hasn't met that threshold, and then would apply for the 250 amount. So I would say that, working with your advisors, whether it's your accountant or other, your business partners or other advisors, decide what you need and apply for it.
So I might add one in that is related to that. Ned is asking, saying that their revenue loss was less than 500,000. I'm not sure what the percentage would be, Ned, on that. So, but anyway, they applied for the $150,000 loan. An advisor did not tell me that I do not qualify, and she submitted the application last week. What should I do? I think Ned's question might be more around, like, when do you expect to hear back? And it sounds like it's worried that they might not qualify based on some of the criteria that you had put forward before.
So just on the question about when should they expect to hear back, we are, the way that the program was designed was for speed and efficiency, so that there's not a lot of discretion to be applied. It's more formulaic, and then the decision is binary. So what we're seeing is a relatively quick turnaround time, so a couple of weeks. So if that's the question on turnaround time, I mean, it does depend financial institution to financial institution, but I think if a business hasn't heard in a couple of weeks, they should be going back to their FI and asking what's going on.
Okay, that's, I think, good advice, and also could check back in with their advisor. But if there's anything, Ned, in this deck that is contradictory to what your advisor has advised, obviously you can share that and ask questions based on that. That might be another road to go on. I'm going to stick in a couple more quick ones, Corinne, and then throw it back to you. So we're doing the tag team, Karen. I feel for you. You're double teamed here. Michael is asking, at what loan amount is a review engagement required?
I'm not sure I know what review engagement means.
Okay, so Michael, maybe you can provide us with a little more context on your question, because I can't help you there. Bobby is asking, could the HASCAP loan proceeds be used for a renovation of a building? Renovation would be changes caused by COVID. So does that fall outside of the scope of the loan?
Well, I would say that if it is something that you have to do, it's an operational cost to keep your business running. Then if you want to feel comfortable, you could talk with your financial institution about it. And if they're not sure, they could come to see us. We're providing some guidance to financial institutions as these questions are arising. But don't self-center. Have a conversation with your FI, and if they have questions, they will reach out to BDC on whether it's eligible or not.
Okay, thank you. Corinne, back to you.
Great. So I have, Karen, a couple questions here about probability of default. So Cindy's asking, can you explain what a probability of default means? Because I would think that when COVID started, many businesses started to struggle. And if a bank determines this business was in their slow season when this started, they would likely not qualify. And Michael similarly is asking, how is the probability of default requirement determined?
Yeah, this is something that the banks do all the time. If you're a client, that's one of the reasons why we chose to have businesses apply through their primary financial institution, because this is a calculation that's kept on all of us. If we have a credit card or a mortgage or a bank account with a financial institution, and it is a calculation that is there's not one formula that I could give you because it is financial institution dependent. But what I want to reassure everyone of is that, because I got the impression from the question, Corinne, that people are concerned that this is being determined during COVID. The probability of default assessment is going to be looked at based on the business's position prior to COVID. So so it's not going to be accounting for the stress period that the business is in.
Okay. So that's interesting. I mean, the other area that I'm getting a few questions around is around the personal guarantee. And I guess a few folks are saying that the banks are asking for, I'll give you Ugo's question, is given that there are no personal guarantees requested, banks are requesting net worth statements, GSAs, and prior year financial statements for all segment loan amounts. And they want to know, is this a BDC requirement?
So the GSA is a requirement.
Okay.
But there are no personal guarantees. If a business is being asked for a personal guarantee, I would recommend that they get their information to you, Corinne or Laura, and then we follow up directly on it, because it is not only is it not a BDC requirement, it's not a requirement in the agreement. So that shouldn't be the case.
Okay, because Manny is telling us that that they've been talking to their bank TD about HASCAP, and they're still asking for their notice of assessments and a personal net worth statement. When they question them on that, they mention that they will still do a personal credit check. Does that make sense to you? So that would be in the same category. They should raise that?
They should raise that.
Okay. Rachel, do you have some more context to add here?
Yeah, well, not context, but I have another member who says that they had to provide their T2 to their bank, and his wife is actually listed as a shareholder, but she doesn't have any voting shares, and they're actually Class B shares, and she's never had to sign anything regarding the business in 40 years, but she's being asked to sign as a guarantor. So maybe that's something we can send your way as well, because it seems a little bit odd.
Yeah, so the only case that I've become aware of where more information of the type that you've just raised has been requested is where a business is going to a bank that's not their primary financial institution. So that other bank would not have any credit history on the business, and they're in order to calculate the probability of default, they may need some of this information. But if a person is going to their primary financial institution that already has all the history, it feels odd that they would be asked for this information. And like I said, in all cases, there are no personal guarantees being taken on these business loans. Yeah, in these very specific cases that you're mentioning, it would help me to follow up if I had more detail.
All right, so I think we have quite a few of them. So folks, if you're in this category, if you're being asked for personal net worth statements in applying for HASCAP or other things, if you could call us at CFIB, our friends here, Rachel and Brendan and their colleagues. So we'll put up the phone number again at the end of the call, but that will help us get some clarity around the situation and try to find out if there's some consistency. Maybe it's one particular bank that's doing this, or if it's all over the place. That helps us understand how broad the problem is. So.
On my end, I'm seeing TD Bank and RBC mostly, but yeah, I also have another question afterwards.
Yeah, but Rachel or Brendan, maybe one of you could alert our counselors to expect those calls so that if people are calling, they're not having to explain what this is about, that would be great. I'll just put in one quick one that from Brittany, who says, I just got a call from my bank and my loan just hit my account. Yahoo! So Karen, this is making a difference to people, and people who need it are really grateful to be getting it. So just a Yahoo from Brittany.
Go ahead, Rachel.
Okay, so I have a little bit more of a technical question from Stephanie. So she wants to know, how is the debt service coverage ratio calculated for the loan in excess of $250,000? We have happened to, they actually had some large one-time expenses for their most recent financial statements prior to March 1st. Can these be included when calculate the debt service coverage ratio to normalize their earnings before interest, taxes, depreciation, and amortization, since they won't be repeated going forwards, and they don't want it to impact their ability to pay new debt. So that's a little bit more of a technical one. I'm not sure if you can answer that.
Yeah, I mean, what we tried to do in the agreement is to kind of, whether it be for the any of the calculations, is to exclude exceptional events. So without the detail of the particular case, I'm not sure if that would fit in the category of exceptional event. But I would recommend that the person work with the financial institution on that. I mean, our experience generally has been that the banks are very open to wanting to do these loans. They want to help. And so, again, if your members are having difficulty, please, I would encourage them to reach out to you so that we could dig into it a little bit.
So it sounds like there might be a little bit of leeway there, depending on the scenario. So yeah. Stephanie, let us know about your situation.
Another, maybe a more straightforward one here. Len is asking for just a little more clarity on whether they can use the proceeds to pay rent and lease.
Yes.
That was easy.
Yes, I have another one that I think should be easy. Kent is asking, what if I recently changed financial institutions in my previous loans with my previous financial institution? Whom do I apply through?
You apply through whomever is your primary financial institution. And that is, I mean, typically your primary financial institution is a financial institution that you're doing business with.
Okay, so that would be the bank they're currently doing business with. So it would be the bank that you've moved to, right? Okay,
correct.
So you can try at the current bank that you are with.
It's where you have your, your operating accounts.
Yeah, yeah, very good. Michelle is also asking, is there a minimum or maximum bank and/or savings balance to qualify? She says we have a savings for growth, but are still concerned for economic uncertainty going forward and could use the reassurance, meaning they want to apply for the loan, but may have some money tucked away, but want to know if that's going to keep them from getting a loan.
No.
Okay. There you go. Some questions for you.
A few questions on, that I think really relate to what might happen in an audit here, but is, how are the banks going to verify or know what the company is using the loan, whether they're using it to pay back debt or pay dividends or for ongoing operational, like what, how are you going to look at that? And do you have any sense of what the audit function might look like?
I don't. We are dealing very closely with the banks. We have a pretty robust agreement, and representations are made on the part of the borrower when they take on the loan, and so I can't give any detail on how the banks are going to behave as far as an audit function goes.
Mm-hmm.
Yeah.
Well, I know that for a lot of the programs, it's kind of the attestation kind of idea that you are basically saying you're going to do this, and then government is working out after the fact, or the banks are working out after the fact how they might audit it. But one of the pieces of advice that we've been giving to our members is just to keep a journal, a bit of a diary on, and so if you are using this loan, you could document some of what you might be using it for, and that would be helpful in case you need to sort of show your thinking or what you ended up using it for.
Makes sense.
All right, Karen, Kristen is asking what the main differences are, the pros and cons of each program when you compare the BCAP, which is a business credibility program, with the HASCAP programs. Can you give a bit of a quick overview of what the pros and cons might be?
So HASCAP is a lower interest loan with no personal guarantees. The adjudication is very formulaic, and it's being offered by more financial institutions. If you need more than $1 million, then you would go to BCAP. So BCAP has the advantage of being going up to 6.25 million, whereas the HASCAP is $1 million per legal entity. So that kind of I think that's where kind of HASCAP should be your starting point, just in terms of cost, but the amount would dictate whether you want to benefit from a BCAP loan as well. And by the way, you could apply for both.
Right. Okay. So would the process be somewhat easier under the HASCAP program too, or because there's no personal guarantee, it's far more straightforward, versus the BCAP would likely be more like a traditional loan, right? They would go through a lot more stages to sort of get the money. Okay. That's right.
Yeah, the design of HASCAP was really intended for kind of quicker decision making.
So I have a few quick ones. William just wants to confirm that personal credit checks should not be conducted for HASCAP, as it's 100% guaranteed.
Well, again, I mean, there may be circumstances. I can't be categorical, because, like I said, there, like in the case where a business it has to go to a financial institution that they've never done business with before, there may be a credit check done, because the new bank has to understand who they're dealing with. So I can't be categorical about that.
That's helpful. Tariq is saying is not clear on where they start the process, current bank or call BDC number to start the process. So I think that's an easy one.
Current bank, primary lender, wherever you have your operating facilities.
And another easy one, I think, Roberto is asking, are the funds given all at once or in increments?
That's a good question, and it may depend. And that's something that you'll want to talk to your financial institution about.
Okay, so that may depend. Good. Corinne, back to you.
Yeah, got a few quick ones here too. I bank with Scotiabank, and my financial advisor is saying they know nothing about this program. Should I be contacting someone else within Scotiabank? What would your advice be when people run into this? Because I know it's happened a few times now.
So we are, going through a little bit of growing pains. I was hearing that kind of comment a lot more 2 weeks ago. I'm unfortunately, now still hearing it, but a little less, as financial institutions kind of get the word out to their front line. And Scotiabank is a participating financial institution. A business needs to kind of insist that, look, your bank is offering it. I think if you go onto the Scotiabank website, I mean, I haven't been on that specific one, but I know the other financial institutions are advertising it. If that member is still having an issue, we're happy to raise it with Scotia.
Okay. So they should probably go to you then next, or should they try?
They should go to you.
Okay. And then we'll raise
Yeah.
Okay, very good. A few sort of coverage issues here again. Stock depletion has occurred and we need much inventory and additional warehouse unit. Are these covered? This is Tarek's question.
I'm sorry, I missed the first part, Corinne.
Stock depletion
Yes.
has occurred and we need they need to get more inventory and additional warehouse space. Would this be covered under this type of loan?
You know, if you need more inventory to run your business, then that's an operating cost, right?
Yeah, and same with Rana, sorry, I'm hoping I'm not pronouncing it correctly. She's a cafe. Our espresso machine broke and our bank, CIBC, kept refusing our loan and gave no consideration to HASCAP. Should she be able to get HASCAP to help her with that particular cost?
Mm-hmm.
Yeah, okay. So there you go. You should go back, and if there's a problem, give us a call, and we'll see if we can help escalate it over to BDC as well, if that continues to be an issue for you folks. Janelle, though, is asking, she applied for the HASCAP loan, and her FI has asked for an insurance certificate showing them as the first loss payable. Is this the norm? She wants to know.
An insurance certificate on what?
I guess when they applied for the HASCAP loan, I guess for whatever it is that, I'm not sure. I guess that's why she's asking if it's a normal document that they should be asked for in applying for the HASCAP loan.
Well, honestly, I don't know the answer to that question.
Okay, that's an interesting one, Janelle. You've stumped the panel, Janelle. So what we might do is, I think Karen will make a note of that, and we'll certainly see whether that is something that would normally be asked for in the course of getting one of these loans. So sit tight, Janelle, and certainly we'll try and get that information up on our website. And if not, again, I invite you to call our helpline, and we'll make sure to inform our staff too once we have a clearer answer on that one.
So Corinne, I have one that applies to us, and there are a number of participants who are making similar comments, but I'll use Tony's as the HASCAP loan program looks great. Our revenue was down 30% last year and could really make use of the loan, but we don't qualify because of that 50% criteria, of course. And I know that, and he's asking, can CFIB lobby to have the qualification criteria loosened? And I know you're also lobbying to have part of the loan forgivable, Corinne. So I don't know, I just wanted to give you a bit of a platform to talk about our pre-budget recommendations.
Sure. Absolutely. I mean, I think it's important we know that for a lot of folks, taking on yet another loan could be a bit daunting at this point in the pandemic. And so we've certainly been conscious of that. And we know that many of you have taken on large amounts of debt. And so I think this is an attractive program for many folks, but it's just taking on even more debt. That's a bit of a scary process. So we're certainly suggesting government look at ways to make part of it forgivable. I think we're getting lots of feedback. I also have a number more inquiries here about making a bit more flexibility, that they maybe have 47% revenue loss and they're now not eligible. Like there's some of those that are coming in as well. So they're, that they've really had, or they're seasonal businesses. I've seen that one come in, and therefore they're in the last 8 months, their revenue losses don't look as extreme, but during their high season, which was last summer, may have been more extreme. So those are some of the things that are coming in that really show that perhaps we need to look at some of the criteria that are around it. So we'll certainly be looking at that. So more examples we can get, the more we'll be able to work with the government on making these changes. Karen, I'm sure will hear it yourselves through their own inquiries that are coming in, and do what they can that fits within the program. So thanks for that, and we'll continue to advocate on changes. So this has been actually super helpful for us to understand where the changes should be. I do have a couple more quick ones, unless Laura, you want to. Okay.
No, I was just going to say, Karen, consider yourself lobbied. There were a number of comments on that. I mean, we'll do our own lobbying, but you've had some direct lobbying from members on this webinar.
Yeah. So Lori's just quickly asking, HASCAP is available to any business that meets the criteria, correct? I just want to confirm I don't have to be in any certain sector to qualify. So we'll just confirm that with you.
Confirmed.
And then William is saying that for segment number 1, should the bank be asking for X years of accountant prepared financial statements? This seems to only be a requirement for segment 2 and segment 3, but he just wants to confirm if that's something they'd be required to do for segment 1 as well.
Yeah, again, if you're going to your primary financial institution, they shouldn't need that information in order to assess the probability of default. So right. you shouldn't need financial statements for segment 1.
But what if you don't qualify for the wage subsidy or the rent subsidy? Could that be one situation maybe where they would ask for it?
Okay. Correct. Yeah, good point.
Okay, so if that's that could be the reason why. If you don't qualify for the rent or wage subsidy, that is the other way the banks can still get you a HASCAP loan, is by looking at your financial statements.
That's right.
Okay, excellent. All right. I think there's a lot more here, but I'm wondering if we're close to time.
I think we may have warned you, Karen, that we often will skate over sometimes when there are just a lot of questions. So maybe we'll take a few more and then we'll wrap up. I'll put a few more in, Corinne, and ask you for a few more, and then we'll wrap up, but we won't go too much longer. VJ is asking, if I applied for $100,000, is the bank supposed to offer the full $100,000, or they might come back with a partial amount? So I think that's a question around how much discretion does the bank have? And a lot of the questions are kind of various different versions of that. So I wonder if you have an answer for VJ, Karen.
Yeah, again, it's the loans are intended to be demand driven. So if you're applying for 100,000 and you meet the probability of default requirement, then you should get what you're applying for.
Mm-hmm. Okay.
And I'll just jump in here, Laura. I had Kevin says, as a former banker, if it's for a piece of equipment, it would be pretty standard that insurance is asked for, at least for a normal loan. So there you go, Karen. We have a former banker in the audience who says that if it's for a piece of equipment, that's where the insurance might be requested. So hopefully that answers the other listener's question at the same time. So I just wanted to jump that in as I just saw that come in. Thank you, Kevin.
I will, though, follow up on that.
Yeah, I think that's probably a good idea, just to sort of validate. Quickly, also, Marianne is asking if we're a Canadian subsidiary business, are we eligible? I guess they're subsidiary to a non-Canadian company. Would they be eligible for the loan?
Interesting. If they are a Canadian company,
subsidiary of an American company, or
yeah, these are good questions. Let me confirm that one for you.
Okay, fair enough. All right. So Marianne, you're just going to stand by and we'll make sure to see if we can get that answer for you. Brendan's up on the screen, so perhaps Brendan has something he wants to share before we shut things down.
One where I'm getting a whole bunch of questions from our members on, and just to relieve Karen from the hot seat for just a second so she can catch her breath. This is for you, Corinne. There's some confusion regarding the wage subsidy program and the statement and the rules surrounding non-arm's length and arm's length employees now, and the need to use the baseline remuneration as a calculation. Are you able to clarify that just a little bit? And it is a confusing situation in development, so hopefully, are you able to maybe speak to that in generalities just a little bit and try to clarify what the distinction is between the two?
Sure. So a non-arm's length, of course, is if you hire somebody that you're related to. And the government wants you to use baseline remuneration to make sure you're not suddenly inflating the amount of money that they're earning. So they want to see how much did you pay them prior to the pandemic to make sure that the amount you're paying them during the pandemic is equivalent or close to what it was you're paying them prior to the pandemic. So it's a way for them to kind of validate that those amounts are similar in nature. So that is the reason why they're asking you to sort of show a baseline remuneration or pre-crisis pay for people. Most non-arm's length folks are the people that are related to you, your children, your spouse, your siblings, right? That may be working in the business along with you. Does that sort of get at what you need, Brendan, or would you want to go further than that?
Yeah, there's some belief that that's changed since the beginning of the start of the program recently, and I just wanted to clarify the fact that there really is there a change?
The only change that happened was that you used to have to calculate that for all your employees, and they sort of stopped requiring that for arm's length employees a while ago now. So it's always been there for non-arm's length employees and employees that are on furlough. So
perfect, exactly. That's great. Thanks, Corinne.
No problem.
Great. Thanks. Well, I think we've answered, you know, we're always, Corinne and I always talk, you know, before and after these webinars about how unhappy we are when we can't answer every single question, but we have answered a number of them, and we will continue to answer questions on this. We'll pull some into our next webinar if needed. We will also make sure our FAQs are up to date, and so we're constantly trying to keep you current, and obviously this is very helpful. Typically what I do at this point, Karen, is I wrap us up and I give Corinne a chance to just make some final comments. I'll give you a chance, and then I'll wrap us up and we'll end the webinar. So maybe Corinne, I'll go to you first, and then Karen, I'll go to you for some final comments, and I'll wrap up.
Great, thanks, Laura. Thank you, Karen, so much for joining us on behalf of BDC here today to shed some light on the HASCAP. I think we all learned quite a bit here, both from how that program actually works to also better understanding how it may still be improved or what some of the gaps may still be. So this has been, again, as I've always said before, your feedback is absolutely essential to the work that I'm doing, and it's going to help me sort of provide the feedback government's looking for as well right now, and how the HASCAP loan is doing and how they could improve it in order to sort of attract as many people as possible that really need it. So thank you again. If we aren't able to answer your question, please, please give us a call. Brendan, Rachel, and many others like them across the country are happy to try to answer those questions. Karen has already committed to trying to come back to us with a few of those responses as well. So we'll be sure to share them with you, as Laura said, on a future webinar. And once again, I want to thank everyone for joining us. Please stay safe, and we will hopefully talk to you again soon.
Thanks, Corinne. And Karen, I want to join Corinne in thanking you and giving you, I'll give you an opportunity to make some final comments as well, but it's such a pleasure to have people like you on our webinars to help our members navigate these programs. So thank you very much. And do you want to make any final comments, any final tips for business owners?
Well, just to say that the HASCAP loan is available. If it's something that's right for you, I encourage you to apply for it. If you're having difficulty accessing it and you think it's not for founded reasons, then please reach out to Corinne and the team at CFIB, who, as I've said before, are tremendous advocates for you, and we have a great line of communication between our two organizations. So we really want to kind of help to smooth out any of the wrinkles in this program that was kind of stood up pretty quickly, and so need your help and your feedback in making sure that it's serving the purpose that it was intended for.
Thanks, Karen, and thank you again for joining us. So I'll just wrap us up now, and a big thank you not just to Karen and Corinne and the others who helped put together the webinars, but to you, for all of you who participate in these webinars and who bring your questions. And not only are you getting questions answered, hopefully for your business, but you're helping the many other businesses out there who don't always have time to or know about these webinars. Maybe they're not members of CFIB and they don't know about these webinars, but they benefit as well when we're able to make improvements to these programs and have that direct line that Karen is talking about. So a big thank you to all of you for being part of this, this community that I think is effectively pushing positive change to the programs under difficult and frustrating conditions. But that's why we shouldn't forget that flowers grow through dirt. And with that, I will leave you for another. I think we're thinking about not having a webinar next week, so we may not have one next week. Check your email, but we'll definitely be back a week after that for whatever updates are available. So we're just kind of paying attention to the news and what we've got to share with you and make sure we have enough new, fresh content. And with that, I'll say thank you, everyone. Happy Friday's Eve, and I wish you a really fantastic rest of your week and a great weekend. Bye, everyone. With that, we'll end the webinar.